features of this new abbreviated program, the OMT. Now for an expert view on what the ECB's OMT will amount to, I'm joined by Moorad Choudhry, Treasurer at RBS Corporate Banking. Moorad, thanks very much for joining me on this monumental day. Draghi, it seems, has delivered on all expectations that the market had of him when it came to bond buying. What do you make of this OMT, what it will do in terms of reducing yields of beleaguered peripheral countries, and how it will work?
Well, if we take it from the top, this buys a lot of time, well, certainly buys time for the euro, for the political leadership to sort out the structural issues connected with the euro as long-term viable currency. But I like the intellectual coherence of Mr. Draghi's program, where he said, you know, the transmission of monetary policy was becoming ineffective in certain eurozone countries because of eurozone-related issues, bond yields, other credit-related, sovereign credit risk issues, and he has made the argument that for monetary policy to be allowed to go through and impact the entire eurozone, he's got to do this bond buying program. So that's quite a nice way to describe it. We shouldn't, however, be under any impression or kid ourselves that ultimately this buys time for the euro from a political point of view. So it helps out the political leadership, and it allows them the framework and time to come up with the fiscal integration solution, which is the only solution for the eurozone if they get to maintain it in its current form. But certainly, as it's described now, we should see, to take your other question, we should see bond yields coming down. We should see some smiles on the faces of investors and on all market participants, because this time means, you know, we shouldn't be in a crisis mode for the time being. But of course, if the political leadership doesn't deliver what's required from a structural point of view, then we'll be right back where we started. And all that would have happened is the ECB would have loaded itself up with a lot more sovereign debt of lower than AAA quality rating.
Or lower than AAA, much lower than AAA quality rating. How is this going to work, Moorad? Because the ECB is not going bond shopping tomorrow. It's linked the OMT to countries applying for some form of a bailout, either full-fledged or precautionary. Now, won't that depend on whether Spain or Italy are willing to abide by the conditionalities that such a bailout program will come with? And if they're not willing to abide, then what happens? The last question on this, what happens if the ESM doesn't go through with regards to that constitutional court verdict that's expected on the 12th?
There's a lot of questions there. Formally speaking, yes, ECB bond buying needs to be tied in with a request for assistance from the formal mechanisms which you've named, so that bonds can be bought. So there needs to be a formal request, if you like, from the governments, from the assistance mechanisms, and then the ECB can step in and buy. They obviously want to buy in the secondary market. They want to make it actual quantity of money neutral. That's their idea. But of course, it does need to be connected with some formal request for assistance. So it's not like just a separate ECB going and buy. That's what we're hearing today. So how it works out in practice, I'd like to see further detail. I'd like to see how it works through in practice. But that's sort of the formal position as of today. I don't think it's just the ECB on its own, not in theory anyway. The idea is this is connected with a more formal bond buying program, a more formal request for assistance, which enables the bond buying program to kick in. But we'll need to wait to get some further detail.
Yeah, but Moorad, the big question is, will Spain or Italy want to participate in a bailout program? We've already heard the kind of hesitation those governments, especially in Spain, have had to participate in any bailout program because of the conditionalities involved. Now, if they don't make a bailout request, then the program doesn't kick in. If the program doesn't kick in, the bond buying doesn't kick in. So in a sense, is this a bit of a non-starter, even though the markets would have you believe otherwise in terms of the reaction that they've, given this scheme?
Absolutely. I do think it will be made to work. So there will be further negotiation discussions. Obviously, you're right, from a reputation point of view, or from a standing point of view, if you like, the government doesn't want any further conditions. So this will be made to work. They'll have to come to some agreement. So the conditions strict conditions maybe end up less strict, or there may be some compromise. In fact, there will definitely be some sort of compromise sorted out. You mentioned the objections that the Bundesbank raised before today, and subsequently will raise after today, I'm sure. That needs to be worked through. But I don't think there'll be an issue in not implementing this program. I think at some point, with compromise on both sides, there will be a mechanism that enables the ECB to go into the market and conduct further bond buying. I mean, that's the whole point of this. If they don't do that, then we're right back where we started before we even started this temporary buying of time solution. So there will be some compromise, there will be some element of kicking in the two formal assistance mechanisms, and then the ECB will get into the market and start buying up bonds.
All right, let's hope that's how it works. We're just days away from that constitutional court judgment in Germany. What happens if the court does not deem the ESM to be constitutionally valid? What happens to the ESM then? And since this bond buying program is linked to assistance by the ESM, what happens to this bond buying program?
It means we're right back where we started, and there'll have to be some further discussions, further conversations with the political leadership, and further compromises. This is the EU, after all. This is the European Union. This is how it works. If they throw it out as unconstitutional, the German government will have to deal with that in its way, as it would if the Constitutional Court threw out any piece of legislation or any piece of structural impact on the German economy or the German state. So I would say we're right back where we started. The markets will start tanking again, but let's wait and see what happens. I don't think there'll be an issue ultimately in the ECB being able to go into the market and start buying up Eurozone sovereign debt. The mechanics need to be worked out. We have to see what the result of this Constitutional Court judgment is, of course. But of course, if there's some way of this not happening, if it results in the ECB not being able to do this, then we're right back where we started. The Eurozone is in more trouble. We'll see bond yields going up. We'll see pressure on bond yields, whether it's 7%, 8%, what have you. And then at that point, something's got to give. So hopefully this goes through and it enables the politicians to buy time. Enables the politicians to implement a solution because of the time that's been bought, given this ECB announcement. Of course, if they don't make use of that time, we'll be right back where we started, and that means the Eurozone is not long-term viable. People are saying there will be someone dropping out of the Eurozone even before the end of this year. I personally don't think so, but it remains to be seen, of course.
All right, there was a section of the market that was also expecting a rate cut. That hasn't come through. The one can't, complain given what this OMT could potentially do to the market. Do you believe that the ECB today has delivered what it can within its mandate in terms of being able to come to the rescue of the Eurozone?
In a word, yes. With regard to the cut in interest rates, I don't think anyone's too fussed really about that. Mr. Draghi again made a comment about, it had no real relevance in certain parts of the Eurozone, hence the monetary transmission rationale for bond buying. As I said, I like the intellectual coherence of that, but we shouldn't kid ourselves. This is ultimately a way to enable a political solution to the Eurozone problem. So if the EC, and I do have some sympathy with the Bundesbank's view that actually this just means it's against the constitution because it means the ECB is just buying up sovereign debt. They'll never ever get over their fiscal budgetary problems, and we'll end up with being addicted to a drug that we can't get ourselves weaned off. I do have some sympathy with that position, because really it's not the job of the ECB to be supporting the euro in a political framework. No matter how much they dress up the intellectual coherence of monetary policy transmission, let's not make any mistake that this is ultimately giving time to the political leadership of the Eurozone and in the EU to come up with a solution that makes the euro long-term viable. That is fiscal integration in some form or another. That's it. There's no two ways about it. It's transfers, taxpayer cash transfers from north to south until they get their economies in shape. Otherwise the euro isn't long-term viable. So while I like the way it's been described and it's intellectually interesting, we shouldn't kid ourselves that this isn't anything other than buying time for the political leadership to sort out the Eurozone's problems.
Moorad, by the way, this is an unlimited bond buying program whenever it does take place. I guess putting a size to it is counterproductive, isn't it? Because just to thought that the ECB is ready to intervene, even though it comes with several strings attached, should be enough to deter any runs on the bond market or the bond vigilante, so to speak.
Absolutely. The second point, absolutely spot on. The minute you put on a size in it, the market will try and test it. I would say the size needs to be as long as a piece of string. It needs to be what it needs to be so that yields aren't pushing ever upwards. It needs to be what it needs to be to calm the markets so that nervousness leaves the market. We can have a more stable market environment in the Eurozone, and then the economic policy can concentrate on other aspects and not just Eurozone worries. So I wouldn't say there should be a size put on it. I wouldn't hazard to estimate what they need to do. It needs to be material. It needs to be substantial. If you remember 20 years ago when the Bank of England tried to protect sterling in the ERM, it wasn't quite big enough for their own firepower. So, let's not quote a specific size. It needs to be what it needs to be. If it doesn't work, we're right back to square one anyway.
All right, but Draghi clearly means business, or at least that's the story today. Thanks very much, Moorad Choudhry, for taking us through what those ECB announcements could mean in terms of the OMT. Now a quick check on what else is driving European markets today. There is more.